Welcome to Real Estate Radio Live, an informative and engaging podcast discussing everything you need to know about the world of real estate. Your host, Joe Caccera, provides you with insight and guidance on how to buy, sell, finance, and invest in real estate. He also offers real estate tax management strategies, new construction advice, home improvement tips, and much, much more. And now, to guide you around the world of real estate, here's your host and Real Estate Radio Live team leader, Joe Caccera.
Welcome in, Joe Caccera with Real Estate Radio Live, the podcast series. As we move through the week, thanks again for joining us. We continue to grow more and more information and expand. We love your feedback, love your thoughts, love anything you have to say to us, and any advice, thoughts, suggestions, we'd love to hear those. A couple different ways you can reach me, area code 408-838-9060, or you could email joe@reradiolive.com. 7+ years of radio and podcasting. We're going to continue bringing you the education information. Our main objective of this show has always been the same: help make you wise consumers by providing you education and information on real estate. The goal is not to make you experts. The goal is to help you. So when you do make your decisions, you're making wise decisions and you're choosing the right people to work with. That is the goal. Today we're going to talk about rates and programs. I'm going to give a little update on interest rates. How are interest rates looking right now? Some things have changed in the marketplace. How do we think interest rates will affect the market here in the as we move into the second part of the year and wrapping up the year? And then secondly, I want to talk a little bit about programs. The reason why I like to educate people on programs every once in a while, it may seem repetitive in some senses to some of you, but there are a lot of programs out there that are very unique and that are different and that are truly valuable, that are not a fixed product, that are not a 30-year fixed, that are not a 15-year fixed. I know there's a lot of negativity around any other product that is not a fixed product. And I would suggest that listen to what I have to say and let me hopefully educate you on different products. Now, it doesn't mean that these products are right for you. I'm not suggesting that to run out and change or don't think a 30-year fixed or 15-year fixed is right for you. What I'm suggesting is, depending on your strategy, how long you're going to be in the home, how long you're going to own the home, what are you going to do with this property? Are you a business owner? Do you want cash flow? All these things come into play with different programs when managing your mortgage. So that's what we're going to talk about primarily in the second part of the show today. All right. So let's jump into interest rates. How are interest rates looking right now? Again, be careful when someone's quoting you interest rates. You'll hear me say this all the time. Most of the stuff you get on the internet, e-commerce, social media, television, even seriously radio, all this stuff, be careful because there's a lot of hidden secrets. There's a lot of what I call misleading marketing and advertising that you'd be hard-pressed to try to sue someone for intentionally misleading you. But a lot of companies, a lot of marketing companies, a lot of lenders intentionally mislead. Now, could we prove it? Probably not, because it's too difficult to prove. But if someone has to think about this. If someone has to show you super fine print and talk so fast that you can't even hear what they're saying, what do you think about that? What if someone in an ad said, you're probably going to be familiar with this, what if in a rate ad someone said, we're super excited to offer 3.2%. I'm just giving an example. 3.2%, no closing costs, no this, no that. And, of course, you stand up, you sit up in your seat, you get attention, you're excited, you're like, oh, my God, I didn't know something like that exists. And then, right at the end of that advertising, you hear this voice comes on that talks so fast, it sounds like one of those, what are those minions or midgets or whatever, not midgets, but what are the little, yeah. I mean, they talk so fast that you can't understand them, and then there's disclosure information in there that you can't read because it's so small. And it's funny. I'm being a bit sarcastic about that, but it's true in that what they've done is they put something out there that gets your attention, right? And then once it gets your attention, Then they want to go to the misleading part because they want you to call. Believe when I tell you this, the good old saying that everybody's heard, we've probably heard it from our parents, grandparents, and we continue to hear it. If something sounds too good to be true, it probably is. And it's no different than interest rates. Don't be fooled by these companies, these people that make these claims, and then you get on the phone. Believe me, I'd love to hear from people your experience with this. By the way, I test these things. I don't just live them, I test them. This is my business. So I'll go online or I'll test, I'll email, on purpose I'll call every once in a while these 800 numbers and say, hey, I just saw this advertising on TV. I'm really excited. You said you were advertising this rate for this program. And they'll say, oh, yeah, something, thanks for calling, blah, blah, blah. And then they'll say, tell me a little bit about what you're doing. And I'll give them some information and some basic information, right, on purpose. I test this stuff all the time. You know what happens? They'll say, oh, yeah, that rate that we advertise, it's true. We do have that rate, but let me tell you what's involved with that. Okay, what's involved with that? What happens, ladies and gentlemen, is typically when you get down to what I call the nuts and bolts, or you uncover the truth, that interest rate that they advertised there was attachments to, there was conditions to it. What I mean, there's conditions. I'll just give you an example. Here's what happens a lot. Those fine disclosures, when they say, great news, we get you a 30-year fixed for 3.25 at no points, no costs, right? I'm just giving an example. And again, this is a disclosure here today. I'm not offering that. I'm not suggesting someone's offering. I'm giving you an example of some things you hear on TV, radio, and you see on social media, online, and all this. So then you call and you find out, okay, great, I'm excited. Let's get that 3.25% at no points, no cost. And then they say, well, it's not really that way. And you say, well, what do you mean? That's what the ad said. Well, no, if you really read the fine print or listened to what and so I'll say, well, I couldn't read the fine print. It wasn't on the TV long enough, or it wasn't disclosed. I could barely read it, and I didn't understand what the person was saying. You guys know if you're listening to this, you know what I'm talking about. We've all been exposed to it. But what happens is, this is false, misleading advertising. Hard to prove, really difficult, because they do all the stuff that they're supposed to do by law with compliance in disclosing. But really, it's a bait and switch. That's all it is. So my question to you, along with the same lines, do you really want to do business with a company or a person that advertises this way? Does that concern you? Some people might say, no, it doesn't concern me, Joe. I don't really care what people do if I get the cheapest rate or cheapest fees. I'm not saying there's a right or wrong, but there are some people out there that would say, Joe, I don't care. I mean, I don't care if someone lies to me, misleads me. At the end of the day, if they're the cheapest and they could save me the most money on a real estate or lending transaction, I'm there. I'm good. Okay, that's fine. I think that's a small segment of the population. I think most people want to do business with people they trust. I think they want to do business with companies they trust. I think they want to do business with people and companies that they feel are ethical, I think. And so the reason I'm bringing this in updating interest rates is I want to continue to let the consumers know that what you're up against out there in the world of interest rates and advertisement and all these different programs. So be careful. Make sure you're very careful before you make your choices. You'll hear it on programs all the time on a regular basis. Use me as a resource. My primary business, most people know this, my primary business is residential financing. However, I work with a group of experts on the real estate side, the title and escrow side, every aspect of real estate. I have team members. I have people that I trust, that I would trust in every single transaction that they would do with anybody. But my primary business is lending. And so if we could help you, believe me, there are situations when people call me and they say, Joe, I've already started with someone else, but I've heard your show. I trust you. What do you think about this? I'll have people that run information by me that don't end up using me, and that's fine too. It really is. That happens. I just had a situation. I'll tell you a quick story before we end this first segment. I just had a client that was referred to me. Great, really appeared to be a great client. Very good person, very smart, intelligent, successful person. Buying a home for over $4 million real quickly. They needed a $2.8 million loan. Started the process. Got him approved. His income was a little complicated because he had restricted stock units that he wanted to use for income. And we were able to do that for him, but it took a while to get him approved with the right investor to make sure that we could use that income. So we got him approved up to $2.8 million. They were good to go, ready to go. He went out. They didn't get the house they wanted, so they're out looking at homes again, and they were in an open house. And while in that open house, they ran into someone from a major lender. I'll just say it the way it is, from Bank of America. They ran into a lender who was sitting there in an open house from Bank of America, and she says, of course, which she's supposed to, hey, can I help you? I know you're out looking for a house. And he says, I think we're good. We're pre-approved already. And she goes, yeah, but can they offer you these rates? So she had these flyers there. And again, the rates were extremely low. And the guy, of course, had caught the guy's attention. This is a smart guy, too. This is not someone that's not educated. And he says, wow, you could offer those interest rates on a 30-year fix? And he says, absolutely. Okay. So guess what? His wife said, don't do it. We're already approved. Don't get this started. The real estate agent said, don't do it. I'm going to encourage you not to do this. You're already pre-approved. I'm not sure if I trust these people. They don't have a good reputation. But guess what? He was lured in by the fact or the possibility of a lower interest rate. So he, long story short, I'll move this along. He jumped in, gave these people all of his documentation, promised they could get him that. He decided to go with them. They even locked in the interest rate, and then guess what happened? It all start unraveling. They came back. Sorry, we can't offer this to you. Sorry, we can't get you approved to up to $2.8 million. Sorry, we can't do this. We're going to have to drop the loan amount. Sorry. Well, guess what? He's in contract. He's got obligations he's got to meet, and the whole thing fell apart, and he feels terrible. He called me. There wasn't enough time for him to bail out. He needed to stick with that program. But the point is I had several phone conversations and emails with him to try to walk him through it, even though he was using someone else. And I got the nicest email from him afterwards saying that I made the biggest mistake. I never should have done this. Thank you for everything. You guys have stayed so professional, so above board the whole time. We appreciate you. We'll always use you and refer you in the future. This was a lesson that I want you guys to learn out there, to be very, very careful on who you trust. All right, we're going to take a quick break. When we come back, we're going to continue following up on interest rates, and we're going to jump into different types of programs as well. Joe Kuchera with Real Estate Radio Live. We'll be back with you to continue in just a minute.
For more information on today's program, visit reradiolive.com. That's reradiolive.com.
Hi, this is Joe Kuchera of Real Estate Radio Live. Thanks for tuning into our podcast. We are your go-to resource for all aspects of real estate, including buying, selling, refinancing, building, and legal and tax advice, and much more. You can subscribe to Real Estate Radio Live podcast on iTunes and Stitcher to listen to an engaging discussion about anything and everything real estate. So make sure you get our app, RE Radio Live, in the iTunes store to follow the show.
Welcome back to Real Estate Radio Live. For more information on today's topic or guests, just visit reradiolive.com. That's reradiolive.com. Again, your host for today's edition of Real Estate Radio Live, Joe Kuchera.
Welcome back in. Joe Kuchera with Real Estate Radio Live, the podcast series. As we continue our show today, the topic is an update on interest rates and mortgage programs. That is the topic today, to get you educated on those and updated. First part of the program, I talked a lot about rates and who to trust, and really be careful with a lot of advertising out there, and gave even an example of something that happened to me recently with a client that was totally misled but lured over by a false interest rate. All right, I'm going to talk about programs now, more about, actually, before I do that, let me just summarize real quickly. Interest rates have actually come down in the last couple of months. I am seeing interest rates now, ladies and gentlemen, which is a little surprising, but it's exciting. I want to get that message out to you, really as an interest rate alert. Interest rates on jumbo financing are now below 4%, depending on your credit score, your loan to value, how you get approved, all these types of things. Now, be careful because it's not for everybody. But if you have a good, solid loan to value and you could qualify and you have verifiable income and you have good credit scores, I'm saying 30-year fixed mortgage rates are now under 4%, depending on where you sit. That is outstanding. I haven't seen that in a while. So I would suggest if you have a loan amount in the Bay Area of over $636,000, I would suggest that you give me a call or find out if you could benefit from this. I think over the last year or so, a lot of people, some have went into ARM programs because the 30-year fixed was, 4 3/8, 4.5, was up kind of in the middle 4 range, and they've come down. So rate alert there, certainly for jumbo financing. So interest rates are very good right now. They're actually better now than they were 5 or 6, 7 months ago. Take advantage of these interest rates. If you need to refinance, what I'm seeing a lot now, people consolidating their first and second. Maybe they have an outstanding equity line. Big alert on equity lines, ladies and gentlemen. Wrap them together, get rid of them, because the prime interest rate will continue to be raised this year by the Fed. What that means is it will affect your home equity line. Your home equity line, the rate will continue to go up. And I would say right now, if you have a second, I would encourage you to consolidate that first and second, especially since the interest rates on the mortgage rates on the first mortgage rates are so good. So take advantage of that. If you're doing a remodel or thinking about a remodel, you need to pay off some debt and education, anything like that. Maybe you want to buy another property with the equity. Tap into that equity. Not only the values are up, but interest rates are low, and you can consolidate that into one loan. All right, let's jump into programs. Real quickly, I'm going to go through the different programs, and what I'm going to do with each program is kind of describe on how they might fit in for a person. So most of you know the traditional 30-year fixed, right? Pretty simple, fixed for 30 years and interest rate. A lot of people lean towards this, especially recently when the rates are so low, so they could benefit and they don't have to worry about rates going up. They're done for the period of that house. No more headaches, no worrying about it. 30-year fixed leaves a lot of comfort with people. Then you have the 15-year fixed. Now, the 15-year fixed, typically the rates are a lot better. The difference is you have to be careful. If it's a 15-year fixed, it's amortized over 15 instead of 30. What does that mean? That means your payment is going to go way up. But some people like that, and the reason why is they want to pay their home off sooner, and they want to pay less interest. When you take a 15-year fixed, ladies and gentlemen, depending on the loan amount, you're going to not only save a ton of interest, but you're going to pay your loan off. Think about it. You're going to pay your loan off in half the time. You're going to save a lot of money in interest. Now, some people don't like the 15-year fix because they'll say, yeah, Joe, I could afford this payment now, but if I were to lose my job or take a pay cut or maybe something happened, I don't want to be stuck with the 15-year fix. I'll take the 30 and I'll make extra payments if I want. So that's some of the strategies on the 30 versus the 15. Now, let's talk about some of the other programs. The other programs are kind of typically here, you'll hear about a 5-1 ARM, a 7-1 ARM, a 10-1 ARM. These are fixed for those, the first number means they're fixed for that amount of time. The second number means that they're a 1-year adjustable when they come due. So let's talk about a 5-1 ARM. The 5 mean it's fixed for 5 years. Now, these loans are still amortized for 30 years, so you do get the 30-year payment, but they're fixed for 5 years. The 1 means at the end of 5 years, if you still have this loan, it goes to a 1-year adjustable. Well, what does that mean? What it means is that each and every year, every 12 months, that loan will adjust. And will adjust based on the markets, but it'll also adjust depending on what type of rate you have, what type of program it's tied to. If it's tied to the LIBOR or the Treasury rate, it could jump up 1%, could jump up 2%. Some of them you have to be careful. They'll say they could jump up as much as 5%. However, I can't see that happening in a normal market, although you would never say be careful because we never know what's going to happen. A lot of people are nervous and afraid about these interest rates. The reason why is because they're nervous and concerned on the end of the fixed term. What is that going to mean for them? What is that going to mean for them? What if the rate goes up? What if rates go way up? Then I'm out of, So I understand the reluctance. So you have to ask, why do these programs exist? They exist because a lot of people take advantage of them. One of the reasons people take advantage of these short-term fixed is that they know they're not going to be in the property for a while, or they might sell it. Or some people I know will take these programs if they know they're going to be paying the loan down or pay it off in several years. So they're thinking, why not take a little better interest rate? I'm not going to have this loan for 15 years. Let's benefit from it. So some of these programs really make sense. The 7-1 ARM, the 10-1 ARM, kind of the same thing. They're just extended for a longer period of time. These programs are really good, again, depending on what you're trying to achieve. Are they good for everybody? No. But really educate yourself on them, because you'd be surprised. I just had a client right now that bought a second home in Monterey. Perfect example. It was a $900,000 purchase. He says, Joe, I just want to finance $300,000. I said, well, why so little? He says, well, I'm going to be getting some stock options in the next couple of years, and I'm going to pay it off. And he says, I want a 30-year fix. I said, well, if you're going to be paying it off in 2 or 3 years, have you thought about another program? And he goes, no, I never really thought about that. So I said, well, at the time, the 30-year fix, we were talking to him, were a little over 4%. And I said, look at this, there's a 7-1 ARM. We ended up getting him for 3.375, significant savings in rate. Think about that, from 4.125 to 3.375. We got him into a 7-1 ARM, reduced his payments. He's super excited and happy because he's going to pay that loan off in 2 or 3 years anyway. So why would he have took a 30-year fixed? It didn't make any sense. But if someone didn't explain that to him, he would have took a 30-year fixed and would have paid the higher interest rate for the next couple of years. So these are the types of things these programs are good for. All right, real quickly, interest-only loans. A lot of people think, oh boy, I'm going to stay away from these interest-only loans. They have bad names. They make me nervous. A lot of people get burned, blah, 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 blah. Well, interest-only, again, depending on who it's for, are great loans. You might ask, Joe, who would take an interest-only loan? I'll tell you. Someone who is a business owner, someone who understands cash flow, someone who wants to be able to manage their payment and pay it down in big chunks and then have their payment recast. Interest-only loans are really, really cool if you know if you know how to use them, if you leverage them properly. So what that means is, instead of paying principal and interest, someone gets the minimum payment as an interest-only loan. And let's say the minimum payment's $3,000 a month, and it's interest only. Now, if you don't pay anything more than that interest, you're never going to pay down principal. Well, what some people do is they pay the interest only when they can, but when they have additional money, they pay bigger portions, and then it recasts their payment. A lot of business owners, and seriously, a lot of wise financial people, take these interest-only programs because they know how they could use them, and quite frankly, they love the flexibility. So they're not all bad. All right, unfortunately, we're running out of time. That is on rates and programs. As always, if I could help you with anything related to real estate, financing, buying, selling, tax advice, anything, we have professionals here to help you. 408-838-9060. Again, 408-838-9060. This is Joe Kuchera with the Real Estate Radio Live. Thanks again for tuning in. Until next time, take care.
You've been listening to Real Estate Radio Live. For more information on today's program, visit reradiolive.com. That's reradiolive.com. Subscribe to our podcast. Discover more at reradiolive.com.